That's nice. That's cute. Okay. This is Doc from North America saying good morning, good afternoon, and good evening. And later to you. Another fun filled day. Let's see. The Fed keeps on telling us the same story. And he is not letting go. As far as he's concerned, a good economy needs an interest rate cut. Think about that. Let's see. That means when the party gets wild, when they've got their ties up along their heads like a bandana. They're just up on top of the table. They're on top of their desk at the office at the Federal Reserve, and the party is just going so nuts. They say, "Let's break out the shrooms. Let's light up a joint. Let's just do shots so that we can pass out." And that's what the Fed chairman yesterday basically said. He said, "I don't see a reason why we can't have 3 rate cuts as long as the numbers justify it." And then he mumbled something about they do. And so I just go, what? It'll be the first time in history. It's not a long history. They created the Federal Reserve in 1913, but it'll be the first time in history that the Federal Reserve will try to cut rates in a booming economy. And it's like, am I reading this right? Is Doc off course? Has he lost his mind? Or is he... What? No, wait a minute. What is Doc saying? He's saying they're going to lower interest rates with the economy strong and inflation increasing. But as far as Powell's concerned, inflation is okay now. It's kind of stalled. So I've heard the last couple of days, I've heard money managers say, well, it sounds like the Fed thinks that 2.6 or 3% inflation is okay right now. So as far as they're concerned, the party's just getting started. He wants to lower interest rates in one of the record low levels of employment. That's right. So in other words, more people are employed ever than before. And he wants to, and the economy's growing in the 3 or 2.5% area, which is the norm. They always, national norm is about 3%. So he wants to lower rates. And and the most fun part about it all is we have now 34 trillion in debt. The country is in 34 trillion in debt, and he thinks we should spend more money to go into deeper debt to keep this going. So, wow, I don't know. It's a whole new world, this quantitative easing Fed. It's a Fed that just keeps on thinking that money should be for free to thee, but not to us. Remember how many years, a decade, of almost no or minus interest rates? They want that back. They want to lower those interest rates so that they can borrow even more, the Fed. That's all it comes down to at this point. Talk about the greatest insider trader of all times. He's knocked out Alexander Hamilton. Can you imagine that? Amazing. Just amazing in this era. All right, so that's the Fed. That's my point of view of the Fed this week, today. It's beyond anything that can be explained with any rational economic theory. Any economist that tries to justify that is probably into more like Karl Marx and some type of command and control economy like China. Things like that. That's the only way I can see it. All right, so I guess the Fed thought it's better to be red than dead. Let's go to the dollar index. Now, the dollar index, you can see it right there. It went down because the Fed is trying to make it very clear they're lowering rates. They don't care about anything but lowering rates. That's the most important thing to them. So getting to the 2% 2% inflation rate, as far as they're concerned, if it looks like it's heading in that direction, it's good enough for them. It doesn't have to get there. who needs to run the full race when you're running in the right direction? I guess that's what it comes down to. So okay, let's run that race, and where you stop, and you've completed it. And that doesn't really matter where that's at. Don't worry about that line way, way, way down there with the ribbon that says the finish, because there is no finish now in the Fed. And you can see here today, you see, let's see it right there. Let's change that again. You see that there? Its dollar index is still down on a second day. Let's go over to the bigger platform and take a look at it with the updated algorithm. I thought I had it in there. There it is right there. Okay. So you can see it right there. Oh, let's make it so you can see it too. And so you can see it right there. You know, it finished off, I guess you could say it finished off yesterday at 104.02. And today it's cruising along at 103.91. So it's down about 11 ticks. Nothing major. It went into the sell yesterday. It's still in the sell today. The weekly is holding up, so it's not letting go. Same thing here on the beta. You can see the weekly on the beta, same way. You know, it's not interested in giving up. It's staying in the buy, and it's going to keep on marching in that way. And so for, I guess, I'm not even sure who, is that for personal insider trading? Is that to keep contributors to keep on contributing in political patronage? I don't know. I mean, is the market really going to go through the roar through the up through the all-time high? That's the thing. Stock markets are at all-time highs already. We're sitting right on the edges. We're like just right around the edges of the all-time high. We're there last week. So I don't understand it. Don't get it. The only thing that says to me is that it's insider trading of some form, because it surely isn't satisfying the economy. That's for sure. All right. From there, we go over to the euro. Let's see. Right. There we are. You can see the euro went into the buy yesterday. There it is. And you can see the weekly climbing back into the weekly right there. So we're doing in the weekly buy is trying to climb back through. It didn't have much of strength. I think it naturally just drifted down. As I say, we're in just one big long sideways action. This market is staring at the election, and it doesn't seem to want to quit. It's going to sit there waiting for this election, and it will not back off. It is going to just sit there and sit there and sit there until it actually happens. That's pretty much the name of the game there. It really is. Let's see how we did that. Oh, there you go. That fixes it better, doesn't it? And so there's no other way to phrase it, really. I mean, to me, the only thing I can say is it looks like insider trading to me. He's doing it to make money, and maybe knows he's retiring in 2 years. He wants to make extra money. Maybe he's satisfying the contributors. I don't know. It's something of that nature. I can tell you that, because it surely isn't. It's the first time ever happening in history. And obviously, since we don't have that good of media anymore, no one's going to talk about it the way I do. They're going to talk about it like, inflation's coming down. This is good, I mean, that's pretty much all it comes down to. It's just going to sit there and they're going to talk like, no problems. It's A-okay. But to me, as a trader, what he's doing is something beyond our economic structure. Okay. From there, you can see the same thing going on in cable. Cable jumped into the buy yesterday. Let's get that little green line. We'll steal this one. There. You can see the weekly still a little under. You can see it there at minus 0.00053. It's feeling the pressure. It's not lifting as fast. We'll see. It goes back and forth. The two of them go that way. Matter of fact, you can see it when we look at the Euro GBP pairs trade. At the moment, it's worth buying it, but you can see it oscillates back and forth. Went into the buy here, slid into a sell there, back into a buy here again. I mean, that's pretty much the action we see with this thing. They're not really beating up this particular pairs trade. They just swing back and forth. There are times they almost balanced in many ways. Let me just put these weeklies in here. So there's pink. There. Did that even get into the sell? No, it didn't. Didn't even get into the sell, so it doesn't even matter. Let me get rid of that. Just go into the buy. That's it. It's right there. Got very close though. There it is. So that's the weekly right there, and it did do it here. It went into a sell, drifted down, went into a buy. When you squeeze it, it's coming down from. Obviously, the cable's been the stronger of the two. Remember, when this is rising, that means that the euro is gaining against the cable. So in other words, here from basically the beginning of the year, it was up in the 87 area. It drove itself down into the 85 area. And now we're in the 85, 75 area. It's still way off from its highs. So, it's not much damage being done when it comes to the euro versus the cable itself. Let's see. Now we'll go to Swiss Euro. There's the Swiss. They're fighting inflation. They did lower. Didn't they lower the interest rate a quarter percentage point? I think they did. I don't think they raised it, but they're not. I don't know. Maybe that's what the Fed's trying to do. They have lowered theirs a quarter percentage point. It was 1.5. Now it's down to 1.25. It's a very liquid market over there. So I guess the Fed is dying to do the same thing. The only difference is that their currency is losing value at the same time. So obviously, even while lowering, actually, okay, now I think I understand. If they lowered their interest rate, made people sell Swiss francs, that's why the Swiss franc is rising like that. So I guess the next fantasy is if we can weaken the dollar, maybe we'll get buyers to come in. I guess seems like we have all the buyers we need at the moment. So let's see. I guess the talk, think about this, the talk of lowering rates in the United States makes bond investors think maybe they need to step up to buy bonds to get the higher interest rate. Maybe that's the part of the process. And when we go over to the bond itself, there, and you can see here, this is the, is that right? And that's not updating yet. Let's see. There it is. So you can see here, today it's basically unchanged from yesterday, and it was lower today. They sold it down for a while, then they brought it back up again, and you can see the weekly is still right there, showing us weakness. They want to sell this down. The way this is the WD Gann triangle, and it's a flat. I don't remember what he talked about flats, but one thing is for sure, it's now after yesterday, it's beyond a flat. It's aiming down. It's what they call a flag at this point. And so the flag at this point should have bottomed in here, which it did, and it should be coming up in, it's going to fight its way up into the 119.20s area, and see how they should climb up in this area here. But with this thing going into the weekly sell, it tells us that there's not a lot of life. They may only stall out in the little underneath 119 and start to roll over again. To me, looking at this pattern is saying that basically they're not comfortable with the interest rates. They're not comfortable with, in other words, they what I just said about standing up on the desk and they're totally drunk and been partying for hours, and then they decide to start doing shots. Their ties are up around their heads like bandanas. They're getting nuts. It's like a wild party. The bonds are telling us that the party is a problem. That's what it's telling us. That's interesting when you look at that. They're not. In other words, if Powell made any sense, we would be more like a sideways action. We would have supported the 118 area instead of being down into the 117s. And so the fact that we're seeing lower bond action underneath this area here is disturbing. And the weekly, I guess we'll watch the 30-year bond over the next couple of weeks and months, which we always do. We watch it every day. But the thing is that I haven't really thought about it, but it's definitely not looking good. The money is saying, guys, you've lost your mind. That's what it's saying. That's exactly what the bonds are saying. As a matter of fact, that's going to be the title for today. Bonds say Fed lost mind. Fed, let's see, how do we phrase that? I think that's the clearest reality to it all, really. Let's see, let's go do that before we forget that one. Yeah, it's like the bonds are telling us with that pattern that the Fed bond pattern, Fed lost mind. I think I like that the best. Let's try that. How about this? Fed lost mind, bonds say. Okay. Got to fix that again. Fed lost mind. That's the title today, because that's the way I look at it. I don't look at the stock market as a leading. It's more of like a lagging type of indicator usually, or matter of fact, it could be an enormously leading indicator in the sense that it's always projecting what they think 6 months to a year from now is coming. But the bonds are not that natural like that. That's why they refer to them as the bond vigilantes, because they don't do things very gentlemanly, as they would say. They do things like with a sledgehammer. When bonds move, bonds can move very vicious. And so it makes it, there's no games to be played with the bond traders. They as far as they're concerned, when it's bad, and they just get out. And since it's not a listed market, there's nobody to hold it up. The Fed can come in and try to offer cash to banks and so forth to buy bonds, but that only slows it down. It doesn't change the trend itself. All right, so there's the bonds. How about that? I didn't even think about looking at that this morning. That's the first time I looked at it after saying what I said about the Fed. Now let's go over to the currencies again. Let's get back to them. I was looking at the currencies and I was thinking to myself, they're not saying anything. They're not projecting concern. The only one that's catching my eye and is kind of confusing is this reminds me of the bottom. This is the yen. And this is reminding me, excuse me. There we are. Okay, so there's the dollar yen, but the pattern, like this one here, let's not move that Fibonacci because it's been very interesting. This pattern here tells me that this instead, this reminds me of the bottom of a year and a half ago when we went from 105, 1.05, 110. But yeah, and so that's really saying it to me is that something's brewing with the cable. I'm sorry, the yen. The yen seems to be, I don't know, stalled. Maybe it's a period of uh you know like sideways stall. Maybe the volatility is going to decrease. I mean, the yen didn't trade this aggressive for decades, and so now we're at all time highs. So I don't know. That's really curious. I heard a statement from the Bank of Japan about a week ago about if it broke the 152, they were going to do some I don't know, some type of buying or selling, or I don't know what it was they were going to do, but they were going to do something aggressive. So maybe they're stalled here because they're trying to defend that 152. And every time a central bank tries to defend a number, boy, that one day it becomes a problem. It does. So there's the yen. Let's go over to the Great Experiment. Great Experiment kind of reflected that here. This action here, this big slam, and then closing up for the day. So money is moving around in very strange. They're finding odd places to park. Let's put it that way. Now you can see here today we're starting to climb back into that buy again. We weren't too surprised about the idea that it supported the blue line there, that one extreme of 1.61 Fibonacci. That's where we came up with the next zone is like 37 and change. So it's like, ugh, they've locked themselves in to the lower end of the range, and I was hoping that it would go on for. Let's put it this way: I'd be very happy to see the Turkish lira just go asleep. Just go stall out. Stop lifting up and down 200 and 300 points at a time. Running from the 34s to the 36s. Can you imagine seeing like the yen or the British pound or the euro go from 1.08 to like 2.09 or 3.1 and then go back down to 2.8? That's just incredibly aggressive action. And so, I've been hoping to see this Turkish lira kind of stall out. It's hard to say. You can see the manifold is being touched again by the white line. The green line refuses to even pierce it. And the fast algorithm, all three of these algorithms, the green algorithm, the white algorithm, and the blue dashed algorithm, is climbing back up to the top part of the time manifold itself. That's what these mirror images are. Right there, they're the time manifold. So, that has really got my curiosity going. All right, from there, we're going to head for the metals market. Let's see what the metals market's up to and see how the South African rand is doing. See, it's looking pretty good. It should be moving down. I mean, gold is at all time highs. All time highs in gold. Really, how can they? It's curious. The media is not carrying it too much. They're saying, well, it's looking good, gold. It's usually the opposite. It's like gold in the United States, to a great extent, is what cryptocurrencies are. They're a sign that something's wrong. That's usually that's what gold is, and silver. And in silver, I heard somebody yesterday talk about when silver decides to catch up. Boy, does it catch up! In other words, they were talking about the idea that because it's 50% off its all-time highs, or 48% off its all-time highs now. Now there's gold. And you see It's off a little bit today. It's at 308. I think it settled at 3. What did it settle at? 320 last night. Point 0.9, almost 321 with a high of 322 almost. So they're backing it off a little bit today. What's more interesting is that the way silver started to pop. I was like, oh, good. It's gotten through that 26 area finally after all this time. The weeklies have no problem. You can see there in the silver. Same thing with the gold. The weeklies are not concerned whatsoever. They're above the manifold even. So, which is, it says a lot that that when that manifold is not being pierced, that says a lot. And so at this point, the only thing we can truly say is, see next. There we are. There we are. There we go. Let's see now. Let's go to copper. Took off. We saw that a couple days ago. Right there. And it's holding up pretty firm today. Not really wanting to give up. Mrs. Yellen is going to get some shrooms or something like that. Whatever she does when she goes to China. She's heading over to China again. So didn't she start doing dope or something like that over the last time she was in China? There we are. So yeah, I mean that's the bigger question is what is she going to say to them? Okay, so from there, we'll go take a look at the last of the metals. This one has me just as perplexed as the Federal Reserve. Platinum, trading like almost 60% underneath gold. That has me totally perplexed. Totally perplexed. What happened there? Let's see. There we are. Just lost the chat line. I'm trying to put the chat line back up again. There we are. So yeah, morning. What can we expect today for SPY? What is going on in general? I've just gone nuts on the Federal Reserve. You see my title? I've already come up with the title. Let me just tell you what the title is. Where's my title situation? There it is. Today's title is Fed Lost Mind, Bonds Say. Yeah, Mr. Powell has basically said, let's get nuts. That's what he's really said. He said we need to get nuts. That's what he basically said yesterday. And so the market has been firm ever since because he's still talking 3 when everybody with any common sense that has any credibility is saying maybe next year. Or some of the Fed governors now are saying maybe, and they're saying maybe an interest rate cut in October or November. But they are definitely not talking about 3 rate cuts this year. So yeah, the stock market's looking fine. Here, let's show you what the intraday looks like to start off with. Oh, all right. Hey, let's do this. Let's go over to the SPY. Give you the SPY first. Here's the SPY. So you can see here, there's the SPY. It's up fine. It's in a daily buy now for a second day. Weekly buy for, 26 weeks or something like that. Let's go back. When did it go into the buy in that thing? We went to the buy in the last week of October, first week of November. So basically, all of November, December, January, February, March. Is that 6 months? November and December, January and February, March. That's 5 months. So we're in a buy for 5 months. We finish out a buy 3 more weeks, and it'll be half a year that it's been a buy. Looking at it on an intraday basis, let's go to there. There's the that's the. We should put the SPY in there instead. Why don't we put SPY also in there? Just make a copy of this and do that too. Because I have to figure out what the beta is on this. Say paste. Yeah, this will be the first time in history that we're at 3% GDP. We're at record unemployment. In other words, we're doing great, and interest rates are just normal, and the Fed wants to lower rates. It's the strangest thing ever. And the weirder part is This is what the weirder part is. The weirder part is that we have 34 trillion in debt. The government is 34 trillion in debt minus. That's why it's making not a lot of sense there. Now this is what is this? Let's go back to the S&P and look at that for a second. And figure out the beta. Okay, so yeah, there we are. That's looking about the same, isn't it? Let's move this over. So you can see there's the S&Ps. They've been roaring along now for over the last hour since I started, and they've been taking it up. This is where Mr. Powell spoke. Let's see, let me go show you where Mr. Powell spoke. I think it was right here. Is that it? Yeah, he spoke right there. Is it there? Let's see. Where's the settlement at? Yep. That's the close. Okay, so 15. So that's 3 o'clock, and it was 2 o'clock when he spoke at noon. So he spoke right at here. There it is. This is where he spoke. He spoke. They put out his statement. They put his statement out. The markets fell. This is where he spoke. He started speaking right here. He started speaking here, and the contract was at 5. You know what we should do is, let's see, what is that? That's 10, right? So let's do it in the SPY. Wow, you know what? I could tighten that up. I can see the beta is definitely higher. Setting. Let's try that. See how that goes. There, that's a little bit smoother. So, see, so that is the start of him talking. Right in here. So it was at 5:20:55 in SPY, and once he started speaking, 5:20:55. Let's put a line in there. Right there. So he started speaking there. Let's put this line like that. So that's when he started speaking, and you see automatically it started driving the stock market up because he basically made it very clear. Let's see. It's 5:23. Yeah. Yeah. So it basically was at 5. 5:20:55, and when he started speaking, this is just in the last, this is like 13 minutes into it. I guess we could move a little bit faster. Did it go back? It went down to 5:20:65 after 18 minutes of speaking. And then it started lifting again and never did it look back. There's it again about 45 minutes later. It goes below the line and then it climbs up and down following the line throughout the afternoon. Because no one believed what he said, and it was like, this is crazy. And then he starts pushing the idea that they're starting to realize that he's serious. And you'll see how high it's gone from there. It's up at 522.98 right now. So they actually believe that this can happen. They actually believe that now America, once the New York opens up, maybe the buying will finish off the morning, and then they'll go from there. And so that's pretty much that's the story right there. I'm totally perplexed. It's never been done before by a Federal Reserve to do this, to start, to lower interest rates when the market is at all-time highs. Interest rates are relatively, fair valued, 5% and 4% and things like that. And inflation is going up, not down. So inflation is going up slower, but it's still going up. That's the problem. It'd be different if inflation was going down. But right now, as far as they're concerned, inflation's going up. My core number is in the fours. Larry Summers, Bill Clinton's Secretary Treasurer, is totally convinced that he says we're at almost 10.5%. That's where he says we're at. He's using, during the years when he was the Secretary of Treasury for Clinton, he's using those numbers. He's using the numbers that they used to calculate inflation. So ever since Obama changed it, it's the same thing with the labor number. The labor number has been parked down in the lows all the time. So I mean, they've basically played with these numbers to a point where the math makes it automatically stay down. There's again, it's going up to another number again. It's making another high of the day, right there, and that's the S&P 500, the SPY. So we're in some really strange area, some very, very strange area when it comes to understanding the logic, because we got 2/3 of the Federal Reserve saying only one cut this year at most, and they want to do it after the election. They don't even want to do it in June. I don't know. Jerome Powell has this whole different concept. It's going to be an interesting fight to see play out. I guess in many ways there's like a clock ticking to June. Does he really try to cut the interest rate in June when everybody in the Fed is telling him no? That's the weirdest thing of all. All right. Like I said, it sounds like insider trading to me. I don't see it as anything else but that. They're buying now to sell now. In other words, you buy them low to sell them high. And so obviously, he's talking his book. That's what Powell's doing. He's talking his book. All right. From there, we go over to what were we doing? We were looking at the platinum. Let's just take a quick look at the platinum, and we'll go from there to the energy sector. You can see platinum moving down a little bit again today. It's climbed up, but then has a little digestion there. It's hard to believe that the gold is at 2,300, and platinum is not 1,000. It's definitely, we are in definitely weird times. All right, so from there, let's take a look at crude oil. There it is right there. It's flirting with a little red dot as we speak. It's 85.33. We're not in the sell in the algorithm yet, and the weekly doesn't seem to care. You can see the two algorithms, the white and the green, are at the manifold or cleanly through it with no problem. So yeah, 529. Oh, he's saying it's up 3.65. That's what it is. Yeah, that's what Robin's saying. It's up at 3.65. Here, I'll show you what he's looking at. Right. Where's it at? No, it's right here. This is what Robin's looking at. It's trading at 523.18 right now. And yesterday, it settled at 519. So it's looks like that's what it looks like. Yeah. See, it was 19. Can you see that? Yeah, you can see that. No, you can't see that. Why can't you see that? Let's see if we widen this out. Right there. See, that's 519 yesterday. And then when you swing from, that's the close yesterday, and then when you swing to where it's at now, it's at 523.39. So that's what he's talking about. Yeah, up 394 now. Yeah, either way, it's right around that area. 523.40 last trade. See the box right there? Right there. Now it's trading at 523.41, 42. This is moving even. The beta in this thing is much higher. This is definitely hot. No wonder I used to be able to trade 100,000 lots in this thing. The beta in this thing is rock and roll. Let's go over to here. I think it's 5.9. I think it's 5.9. Let's try that. I'm just going to hit OK, and then I'll double check it. Yeah, see, that makes more sense. The beta in that is so hot. See, I use that on my, right there. No, 6.3. I'm using 63. Okay. Let's go over to 63. Yeah. So it's widened this. The intraday has been, went into a sell here. Lasted 1 bar or 2 bars. Back in the buy till here. Then it did it again. Took it up to there and then put it into a sell for 2 bars and back into the buy again all the way out to there. From there to there. Then it went into a sell for this action right there, and then has been in a buy. Now it's in a sell again. That's what that is. Yeah, the beta in this thing is hot. So it went into the buy right here, went into the sell 4 bars back here. It's definitely hot. Hot. Okay. Any fundamental reason for the dollar decline? Yeah, Powell. I mean, he doesn't care. He's lowering the rates. He wants to party as far as he's concerned. Right there. Actually, dollar is not that bad when you really think about it and look at the prices itself. Let me just go to it. The dollar, right? Where's the dollar at? Right there. It's only 11, 12 ticks off, isn't it? No, look at that. When we started the webinar, it was at 103.91. Now they've really put a push into it. Well, the stocks and everything are representing the same action. They're buying stocks because they see this. Matter of fact, let's go over to the bond. See how the bond is acting now. That must be much better. Yeah, see, it's pushed up. It was at 117.25. Yeah, it was at 117.25. Now we're at 118.2. and it trades in 30 seconds, and it's still threatening to get into a buy, still in the weekly sell. They're going to have to, this thing has to lift. I mean, they've got to, I figure it's going to get up to the 118.20s, 24 area. And then they're going to slam them. I think they'll slam that thing down. I think that's what this is telling us. This is on the edge of talking your book. That's what this is. That's what's so weird about it all. This is on the edge of talking your book. I don't know how else to describe it. Especially when you've got so many people in the Federal Reserve saying don't lower rates. So, all right, from there we go over to, we were looking at oil. Let's take a look at Brent. Let's see what the Brent is up to this morning. There it is right there. And there's Brent. It keeps on flirting with the 90 area. It's in a buy for weeks, daily buy-in for weeks. And it's been in a weekly buy for months. So there's, the pressure has been on the product for a while now. And so they had crude oil pushing into on the edges on the daily today. They're just, let me just show you just go there and show you crude oil. Crude oil is flirting around. Let me just show it to you this way on the big platform, and then I'll show it to you on the beta. Right there, it's got a little red dot going on today, and it's just kind of goofing off. And it's playing around right around the zero line, but the daily is just still holding on. Weekly doesn't care. See the same thing over here. You don't even see the red dot. There's no red dot on the beta. So there it is right there. Okay, natural gas right there, pressing into the sell after a couple days in buys. Still in a weekly sell in natural gas. It's been an interesting run coming off of that 150 area up. And let's take a look at, where's it at? Right, I'm looking for the Spanish energy company now. Right there, there's the Spanish energy company. You see it's lifting up also. It's trying to get in. It got into the daily buy. It's doing the daily buy today. That's what it is. It's trying to get into the daily buy because of the green dot, and the algo went up yesterday. The weekly is inching its way towards that buy area also at the same time. So you're going to probably see some, I guess, summertime, what do they call that? Usually summertime driving, where people kind of travel around, do things because of good weather. Let's see, from there. Where do we go from there? Let's take a look at the Asian stocks and see what they're doing. So we'll go right off to the Nikkei. Right there. And you can see there, Nikkei down a little bit today after being up yesterday. It's in daily sell for 4 days. The weekly, I'm going to take a sip of my tea. The weekly, you can see right there, went into the sell last week, went right back into the buy this week. Again, I'd imagine if we see the yen, as we've seen, hang out in this 151 area, if it starts to take off into the 53s and 54s, I got to believe that we're going to see a higher yen. I think it's an inflation thing we're seeing more than anything else. I don't think it's not as much as Japan is growing. It's more of the inflation because of the currency. All right, and then from there we go over to the Kospi. You can see Kospi is up today, but it has been in the sell for 5 days now. So it's been moving down. And the weekly is hanging in there by a thread. It's been 10 weeks in a weekly buy still. We'll slip over to the Where's the Taiwan? There's the Taiwanese, the Taipei index. Same situation, 10 weeks in a buy. You can see it's 2 days in a sell, but we're getting a green and red dot at the moment. And then from there, we slide down to the Nifty 50 right there. Nifty 50 had a big day today with a red dot at the bottom, but it's still in the buy. See, it's been in the buy now for 3, 4, 5, 6, 7, 8 days now. Most of this move went into the buy back in here on the what's that? The 22nd. So it went into the buy, I guess, right there. This one right there. So it's been in a buy and it's been moving up, and it is flirting with the weekly sell day. That's interesting. It was in a weekly buy for 2 weeks and now is drifted underneath. So I guess, with this move today, let's see if it helps it out and gets it straightened out. I kind of doubt it. It may keep it there. And then from there we go to the all ordinaries on that side, heading for the Indian Ocean again. And same situation, it's up for the day, but it's been in a sell for 2 days now. And at the same time, the weekly is also slid after 6 weeks in a buy. It's sliding into the weekly sell now. After this climb going all the way back to the 26th of February. And here it's been in a weekly buy since the 79 area. And they've taken it all the way up to the 81.5 area, or 81.75, and now it's starting to fall down a little bit in there. Let's see what Hong Kong is up to this morning. Oh, let's do the Hang Seng first. Hang Seng kind of represents the Chinese market more than anything else. You can see 3 weeks in a sell. You see this is kind of bouncing around odd. It kind of been in the daily buy for 3 days. From here it's been in the buy, and it's drifting down today. Let's see what Hong Kong is doing. Poor Hong Kong seems to be the one that's really getting the punishment from all this. Same thing. It closed down for the day. It's in a sell for 3 days, and the weekly has been in a weekly sell for 3 weeks, and it's just climbing into the buy today. See how what's today? Thursday, right? Today's Thursday. So we got 2 more. We have 1 more day for Asia, so they may hold up. It's hard to say. They got Yellen. She's in Anchorage, Alaska at the moment, and she looks like she's like in a sweatshirt. Maybe I think mushrooms are legal up there, so she's probably doing her mushrooms up there. That's why she looks so relaxed. As long as she doesn't do those mushrooms like she did last time in China, she's got to stop doing that. Psychedelic mushrooms. That's really weird. I'm telling you, these are the weirdest times. People go, oh, sure. You're saying that the Secretary of Treasury is doing drugs. It's like, yeah. I mean, it was documented. She's doing drugs. But they don't care. That's the weirdest thing of all. So, okay, so from there we'll go over to the DAX. There it is. There's DAX. DAX is up for 2 days now, but we're in. You can see it's been climbing for 2 days, but it's been in a sell for 3 days. So the price has moved up yesterday and today, still moving, and we've been in a weekly buy for 10 weeks. We'll go from there. We jump to the CAC 40. Where are you? Where is that CAC 40? There it is, right there. And CAC 40 looks like the same way. It looks like it's 3 days in a sell, but its price is, today's almost unchanged. Yesterday is up a little bit, but they're in a sell for 3 days, and the weekly buy for 10 weeks. And you got to imagine when they're watching the U.S. stock market take off like this, you got to figure that they want to buy too. If the Americans are buying, they're buying. And same thing right there with the FTSE. It's been in a buy since back in the 20th. Back here. It's been in a buy right in here. Went into the buy right there and has been in a buy ever since. Right there, the daily buy. And we're in that weekly buy for 10 weeks. Now, for us over here in the S&P 500, you can see a couple days in a sell in the futures contract, but it's definitely climbing today, trying to get out of that red dot. It's been in a weekly buy for 10 weeks. Maybe they, we have the SPY showing us. Do we have a SPY on here? Let's see what the SPY looks like on here. I thought we had a SPY on this. I thought we had QQQ and SPY. There they are. There's SPY. SPY's been in a buy for 3 days now, or at least 2. And it's got a green dot there, but not one yesterday. So on here it's saying 1 day in a buy. And then the NQs, I think the QQQ, I think is 2 days in a buy. Yeah, there we are. So 3 days. So we're 3 days in a buy here. No, 2 days in a buy. I'm sorry, 2 days in a buy here. Right there, 2 days in a buy. Whoop, 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 whoop. And climbing into the weekly buy again. So we're seeing a lot of strength all the way around. Let's check out. Do we have diamonds on here? We should have diamonds on here instead of the futures contract. Let's see if we can find the futures contract. There it is right there, the futures contract. And it's in a sell for 2 days, but obviously not today. It's taken off. It'll find a way to get into that buy as the day gets going. And it's in a weekly buy. So it's showing a lot more life. And talk about the confusion. Just pure confusion at this point. I mean, I think the Fed has lost its mind. I don't know how else to look at it. It's like they're talking their book. I've never seen so much conflict at the Fed, for interest rate cuts. To choose to try to do interest rate cuts with the way the economy is right now is definitely weird. All right, traders, we're out of here. We're going to be back into the universe again. So this is Doc Front, but they have been like that for as far as I recall. They've been really bad since quantitative easing. Yeah, since 2008-9. They have been that wild. But now they, during the Obama years, it got weird, But then, during the Trump years, it got kind of calm. But the worst part, I have to say, is during these Biden years where they refused, they just kept on calling it transitory. The inflation was transitory for a year and a half. That was weird. And now it's almost like he's trading his personal account. That's what it looks like. It's so weird. It's just so weird. Let's see. What are you saying there? Any fun? That's any reason. But they have been like that for so far. Yeah, exactly. They were always politics. Not as much as they are today. And, it's gotten really bad over the last... they should have never kept... They're the ones that forced minus interest rates onto Europe. Ever since, Obama years where they allowed a decade to go through of minus interest rates. That's what made it weird. Yeah. Yeah, I hear you. So that's 16 years ago. So I hear you. I've said enough today about the insanity. That's all I can say. All right, traders. This is Doc from North America. We will catch you all tomorrow. Tomorrow's TGIF. Look forward to it. And we will see you right then and there. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later,